Let's take a look at some quarterly retrospective as well as look ahead for Q2. So the data suggests by all accounts that Q2 historically is the best quarter for crypto along with Q4. Now what may be different this year is that Q1 has historically been an outperformer. Look no further than BTC. It's the third best Q1 we've ever had on record. Q1 has mainly been negative or slightly positive since 2013. Mean post 2013 is 0. So we definitely broke the trend as far as that's concerned. The fourth consecutive positive quarter. Can we get 5 consecutive positive quarters? Can we get a positive Q2 off of an insanely positive Q1? These are all the questions everybody's focused on, certainly. I don't know about how we're going to end the quarter, but I assume we are going to have some sort of bullish continuation here early on in the quarter. For 2 reasons. One, the Coinbase IPO, which is coming April 14th. And I'll get to this towards the end, but BTC and ETH are both just flying off the shelves on exchanges, being squirreled away elsewhere. And there's a rumor that Walmart is one such participant in moving USD to BTC on their balance sheet. So if that hits the news, that'll be a big deal. And buy the rumor, sell the news, as they say. So BTC, huge overperformer in Q1. ETH is a bit different in that seasonality-wise, it's mainly done best in Q1 and Q2. And if we look at post 17, definitely outperforming the averages for, I mean, look at the abysmal Q1 ETH has had since 2017. This is ETH's fifth consecutive positive quarter. That's tough to say. And Q2, if it closes positive, will be ETH's 6th consecutive positive quarter, which I don't know, is that possible? That's something you have to make a decision in your own mind, obviously, but it's worth thinking about. You may be bullish now on ETH as it sits near price discovery, as I think everybody is and should be bullish, but can it close positive on the quarter? That'll be a tough ask, I think. Something else to notice here is Q3 and Q4 have generally been not so great for ETH. So I'll talk about EIP 1559 and layer 2 briefly in a second, but how all those various news events line up with these quarters is probably important for performance. You know, let's say EIP 1559 is just amazing for ETH and it just sucks all the supply out, destroys a bunch of ETH. Yay, we're all bullish. You know, maybe we just throw seasonality out the window at that point because it's a new chain. You know, I don't know, right? I doubt that's the case. I believe in seasonality over EIP 1559, but it's something to take into consideration, certainly. And if we look at ETH BTC, the first thing that immediately pops out to me is Q4 has never been bullish, ever. The second thing that pops out to me is, again, Q3, Q4, not bullish on average. And the third thing that pops out to me is ETH doesn't really outperform BTC that much on average. You know, if we average this out for the year, what is this? It averages, 0 basically since 2017. So it did a lot in 2016 and 2017, but since then it hasn't sort of had a mind of its own for the most part. It has a series of positive quarters, or it had a series of positive quarters in 2020, probably thanks to DeFi, probably thanks to coming off for arguably 6, 0 or negative consecutive quarters from Q3 2018 through Q4 2019. But I think all in all, until there's a major paradigm shift, you want to see paradigm shifts, let's look at stablecoins. That's a paradigm shift I'll show in a minute. But I do expect Q2 to be bullish for ETH BTC. Based on technicals, I expect Q3, Q4 to potentially actually be bullish for ETH BTC. And again, if EIP 1559 is successful, then it's a whole new ball game at that point for ETH against BTC. And then looking at Ripple just as a control, just to show like not everything is correlated with itself or each other. Ripple's, all over the place, right? Like it has a bullish quarter, it has a bearish quarter, it goes back and forth. It's done okay since Q3, Q4 2020. I don't know how great it's going to do in Q2. It's up like 60% or something already in Q2. A word of caution with Ripple, especially long-term mega bulls with Ripple, two things to think about. Number one is you're taking a bet on a bullish resolution of the SEC lawsuit. You're taking a bullish bet on no further lawsuits globally. You're taking a bet on no further exchange delistings. Those are all the things to think about. Another thing to mention is it's easier for a price to go up when there's less places to trade it, which is probably partially why we're seeing the moves we're seeing in Ripple thus far in Q2. I'll talk about CME Futures as well. There's not enough data really for the ETH CME Futures to even look at those, but the BTC futures have been around since 2018. And in general, the long-dated contracts have, for the most part, dictated the trend strength. We are pretty much either bullish or bearish right off the bat, based on an N of 5. 4 of 5 contracts long dated, biannual, however you want to think about that, through 2020, mid 2020, were basically trend determiners. It was either up or down. It wasn't sort of in between. Maybe you want to discount early July contract, but really March was like the anomaly where it closed up, but it was extremely volatile as far as negative and positive. If we look at the contracts now and where we are, September 28th to March 26th, bullish, March 30th to September 25th, bullish, mildly but bullish. We're currently in this March 29th to September 24th, and there's a mixture of long dated contracts now dating to 2022, some dating through 2021, the end of the year rather. So there's more hands in the pot at this point, but if we break up here on this ascending triangle on BTC and like we're breaking up on ETH, I expect continued strength for quite some time, is how I would read this. If we look at hash rate and difficulty for BTC and ETH, both just completely continuing to push all-time highs. ETH especially, GPUs falling off the shelves, ASICs being minted, ASICs being created and produced, even though they'll have very little time in the sun at the end of the day. You can get your ROI probably on the new ASIC, and at that point you may be in trouble. After that, because let's say it has a less than 100-day ROI, but near 100 days, is 100 days enough to beat EIP 1559, and more importantly, to beat the proof of stake transition? It'll probably beat the proof of stake transition, but it probably won't beat the EIP 1559 addition to the network. So I think buying an ETH ASIC is a bit foolish at this point, and you kind of already have to be positioned with your GPUs and whatnot. We're seeing a global GPU shortage, and that is in large part due to ETH. Fees are just insane. Miners are making a ton of money. If we look at LTC, hash rate and difficulty, it's kind of stabilized and remains flat. And Doge could be a big part of why. Interesting that the Doge hash rate is considerably better than LTC because they're merge mined. But Doge has performed extremely well in the past quarter, and undoubtedly helps the LTC block rewards because it's just bonus LTC, or bonus money basically. BSV looks dead to me, as does BCH. Those projects are in a lot of trouble based on hash rate. You don't want to see this. You don't want to see hash rate declining to nothing. Then there's a security risk on the chain. I certainly don't want to participate in those networks. Even Zcash hash rate is increasing to all-time highs, continues to increase to all-time highs. Dash as well continues to increase in the past few weeks after taking a nice dive. So all this stuff, aside from BCH, BSV, looks incredibly bullish for all those respective projects where hash rate is increasing. Monero is another one. So all that looks really good as far as the mining perspective. Talking about ETH fees again, you're not using ETH without realizing how expensive everything is. Definitely a fee crisis. This is total fees daily, and these just need to come down for people to participate in a meaningful way. And it's pricing out a lot of people. Gas is all over the place, super volatile. EIP 1559 is an initiative to try to fix that. You can go ahead and read all about this. I'm not going to go through it, but there's a burning mechanic which everyone is super bullish on. Now, EIP 1559 won't necessarily improve fees at all, and that's something to think about and consider. that's where layer 2 scaling comes in. Things like optimism, rollups, sidechains, plasma, state channels. Again, you can read about this. I'm not going to go into it, but all of it is kind of an hypothesis of what can be done on ETH in order to bring fees down. And ultimately, the winner is probably going to be selected by the exchanges. Whatever the exchanges adopt is probably what's going to be used widely, specifically Uni, Sushi, Coinbase, Gemini, all those. There might be some disagreements and some differing uses, but if layer 2 solutions are all different all over the place, I don't think the interoperability retains itself that's currently there on ETH. So it makes it more siloed, at least from my understanding, between all the layer 2 solutions. So in a perfect world, we have maybe 1 or 2 layer 2 solutions, but we're going to need something soon before ETH collapses on itself and value goes elsewhere. So if you're bearish ETH, you want to see layer 2 scaling pushed off as long as possible. You want to see EIP 1559 pushed off as long as possible. You want to see proof of stake fail and push off as long as possible. Any of those changes or improvements that are coming sooner rather than later should be bullish. And you should definitely read this article, Ethereum is a Dark Forest, from 2020. Lots of people talking about this MEV, minor extracted value or something. I'm not going to get into it on the video, but it's all worth taking a look at and considering. Talking about stablecoins, something that has, exploded. Stablecoins exploded in 2020. This is total stablecoin supply across the board here. Stablecoins exploded in 2020, and then 2021 came, and the currently total 60 billion circulating supply. 40 billion of that is Tether. 20 billion of that is non-Tether. That gap is closing. USDC is quickly becoming a big player. USDC is at the top here. Tether's the bottom 3 here. You can see the Tron Tether's exploding, ETH Tether's exploding, USDC is exploding. We're just getting printing. And it's hard to be bearish when all of this onboarding is happening. Money's leaving the fiat world and entering the crypto world. And at that point, it's usually given a job. It's either to buy more crypto or to yield farm, to stake, to do something. And all that is good for all of us in the crypto world. It's big tent. People can do whatever they want to do. They can even go short on chain, if they want. They can do all sorts of stuff. Use it as collateral, right? One thing I haven't mentioned in a while that I like looking at every once in a while is the Kraken USDT USD price, which is in the line up here, the red line. For the most part, since late 2020, when Tether dips below $1 on Kraken, we're usually in for some bearish action and or pause in the trend. So if I'm bullish in the next quarter, I want to see as little of this as possible. And really since January, we had that consolidation period here. Tether was below $1 just slightly throughout that period. Then we had very little of that through February, through January, through March. So I want to see that as few as possible, as little as possible if I'm bullish. Looking at some on-chain data for some coins, really transaction counts and active addresses are what everybody's looking at outside of crypto. Maybe active addresses more than anything. And depending on the chain, depending on scaling, depending on efficiencies, transactions and active addresses are going to look different from chain to chain, but ultimately you want everything up and to the right, especially active addresses. I want to see that as high as humanly possible. BTC's got 1.2 million active addresses. That's an all-time high. So I want to see that continue to increase. Transaction counts for BTC specifically, for me, not so important because of the efficiencies we have now on chain with batching and SegWit, Lightning, things like that. Not that Lightning is a massive part of this, but it does take the transactions out of the equation. And ETH with layer 2, its transaction and active address picture may or may not look a lot different on how this is counted in the future. But just like BTC, ETH is just screaming, the transactions just continue to increase. It's hard to be bearish on that. Active addresses near all-time highs at this point, around half of BTC per day. It has 600,000 active addresses. XRP, it's good to compare and contrast this stuff to look at what has fundamental bullishness based on on-chain data, and stuff like XRP, where transaction counts really haven't moved up in a discernible way ever, really. Active addresses, same thing. Now, this week with price, I expect both of these metrics to increase significantly as speculators move in, but all in all, that's not a bullish picture for me to see multi-year sideways in on-chain activity. Even compare Ripple to LTC, and you can see transactions increasing significantly even after that gaming airdrop. Active addresses increasing significantly to second highest all time. So there's bullish underlying reasons there. Same thing with even ADA, transactions and active addresses, completely different story since the proof of stake transition, the attempt at decentralization, that sort of thing. Just mega moon in those on-chain metrics. And then Link, which is kind of in both camps, it had a big run up in on-chain activity from 2019 to 2020. Since 2020, it's kind of staggered highs, mid 2020 especially, and transactions are down, active addresses are down. You don't want to see something like this if you're mega bullish, throughout the quarter. You want to see on-chain activity perk up. It represents speculation. It represents people actually using, in this case, Link, oracles, that sort of thing. It represents all that stuff just bundled into itself. You can look at calls as far as oracle calls and see activity there as well. But this is also important as far as the token's concerned. And talking about DeFi continues to just absolutely moon, especially when we lump in Binance Chain, BSC. If we take out the duplicates in the solid line here, it's still at an all-time high, a new all-time high, just completely adding to price discovery day after day. And a lot of those stablecoin prints are responsible for this DeFi influx, whether it's moving to buy some AMM pair or moving to be half of an AMM pair or part of an AMM pair on Curve, whatever it is, all that's included here. And BSC exploding since late March, really since ETH fees perked up, whereas the ETH stuff has definitely been increasing, but not at the same rate as BSC stuff has. So collectively, it's hard to be bearish on anything that the legacy folks look at and like, when they say, what did you just do on Aave that you can't do in 6 days with a bunch of paperwork in the legacy world, like that's what impresses people and gets people on board. And we can have that new paradigm conversation. Lastly, I want to talk about some exchange reserves, some coin flows type stuff. So BTC exchange reserves continue to dwindle. I expect that trend to continue, especially if we have more and more S&P 500 participants or some old world companies, ETFs, institutions. I mean, we're definitely at the bottom of what's possible as far as the legacy world. All sorts of funds are coming, all sorts of retirement funds especially are coming on board, potential ETF from anybody coming, all sorts of reasons to be bullish on possibilities here throughout Q2, Q3, Q4, this whole year. If it happens in Q2, great. If not, look for it Q3, Q4. Grayscale Bitcoin holdings, this would be what could potentially get converted into an ETF. And it's unlikely that the Grayscale ETF would be approved by itself. So it'll probably, if it's approved, it'll probably be approved with one or two others. So that's something else to consider. They currently hold 655K BTC, and it's important that they do potentially convert, or at least appear as though they're going to convert because of the discount currently. It's 8%, thereabouts, below spot right now as far as the value is concerned. So if you're bullish on the ETF prospect, one thing to do is to capture that discount by buying GBTC and then letting it go when it hits parity or anything above that with spot. If you look at ETH, same story. ETH exchange reserves continue to dwindle. I don't expect an ETH ETF anytime soon, but we are seeing slowly more institutional buying with ETH. We're seeing more institutional acceptance of ETH, legacy people into ETH, DeFi, that sort of thing. ETH is trying to figure itself out. It's going through growing pains, and it's hard to just be long-term bullish ETH until it gets its stuff figured out, until it gets layer 2 figured out, until it has its SegWit moment for BTC, some sort of governance thing, which is what's coming to a head here with 1559 in the miners, proof of stake in the miners, all this stuff. It's coming. Everybody knows it's coming. But for lots of funds and institutions, they can either speculate on the future or they can wait for certainty. And it looks as though we're seeing more and more legacy institutional players convert towards, let's start to speculate on ETH. Let's start to buy ETH. Slow, but it's coming. So reserves continue to dwindle. ETH Grayscale holdings at 3.2 million, and ETH is currently discounted. I can't zoom in on this axis here, but it's between 5 and 10% discount from spot. So again, if GBTC converts to an ETF, then I expect this to return to at least parity as a reaction, even though ETH ETF is probably far away, and ETH ETF gets closer if the GBTC ETF gets converted, or if we get a BTC ETF in North America, not in North America, in the United States. There are ETH ETFs that already exist in other countries, but nothing in the United States. Then lastly, if you want to see how I'm trading ETH BTC for Techemy, you can check out enzyme.finance, find us there. And it's non-custodial portfolio management. You can see AUM, depositors, all the trades I make, the allocation. You can counter trade me if you want, not directly on the platform, but really this is a copy trading platform where you can send USDC and then it just copies all the trades I make, all the allocations I make. So that's all I have for this one. Like, dislike, comment, share, subscribe. Get us to 10K subscribers, and happy trading.